Hello, and welcome back to the Macro Gamer channel. My name is Mark Hassingham. Today we're going into week 33 of our weekly numbers. As of today's date, March 8th, 2025, which is Saturday, we've had a couple volatile weeks now where market's been taking hits, and a lot of our portfolio too, and all asset classes have been taking a hit. So there's some tough times, but we're going to get through it. So first, as always, our portfolio's net worth. Currently, we're at $422.58 as of March 8th, 2025. We have our portfolio weekly data for week number 33. This is from March 3rd, 2025 to March 8th, 2025. We have no new net cash flow, so no cash coming in this week. As always, every week we deposit $10 into our cash account. When our cash account exceeds $25, it will get deposited into the portfolio. So no cash flow this week. We have a money weighted rate of return of negative 0.14%. We have a market loss of $1.39, and we have no dividends earned. So if you see right here, right around March 6th, we took a hit, came down. Like I said, it's been volatile. Probably a lot with tariff rhetoric going back and forth and what the market thinks is going to happen, but we shall see. We have our portfolio monthly data for week number 33. This is from February 10th, 2025 to March 8th, 2025. We have a net cash flow of $30.14. So you see on February 19th, we have this large spike up. That's when that $30 got deposited into the account. We have a money weighted rate of return of negative 0.83%. We have a market loss of $7.70. And we have a dividend earned of 13 cents. So you can see pretty much right after this deposit, market was just coming down, 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 down. Right, this is the downward slope. So like I said, it's been volatile. Everything's been coming down. We have our quarterly data for week 33. This is from December 9th, 2024 to March 8th, 2025. We have a net cash flow of $123.38. So that's going to be four $30 deposits over that 3-month period. So we have 1, 2, 3, 4. The extra $3.38 is usually from extra cash and dividends. We have probably one of our lowest quarterly returns in a while. Our money weighted returns in a while of 1.46%, positive 1.46%. So it's pretty low. Like I said, a lot of that, if you look at the patterns here, between December and January, it's pretty flat, maybe a little up. Between January, beginning of January, end of January, it went up. Between beginning of February, middle of February, it went up. And then pretty much since mid-February to today, it's been coming down. So we've been losing our gains, unfortunately. Like I said, this has been a bad few weeks. Over that time period, we have a market gain of $4.53, and we have a dividend earned of 37 cents. So this is our quarterly data for week 33. And then we have our all-time data. This is from our portfolio's beginning on July 21st, 2024. We're at $0 to today, March 8th, 2025. We're at $422.58. We have net cash flow of $404.47. So that's going to be our initial deposit of $100 plus $10 $30 deposits. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Every 3 weeks, $30 gets deposited. 100 plus 300 is 400. The other $4.47 is extra cash and dividends. Over that time period, since inception, we're actually no longer in double digits. We came down, which is so sad, but so true. Our money weighted rate of return is 7.98%. This market volatility, you can really see it in this. Like, there was another time, let's see. Looking at all these, it was roughly steady growth. Some little dips here and there. But this is by far the worst one. This is by far the worst run. So we had a market gain over that time period of $18.11, and we had dividends earned of $1.53. So this is our all-time data for week 33, since the beginning to March 8th, and a lot of bad data coming in the past couple weeks. So now we have our portfolio weekly percentages for week 33, and currently we have our target weights here on the right. We have gold still at 30% since the beginning with our GLD ETF. We have US dollar at 20% with our UUP ETF. We have commodities at 20% with our USCI ETF. We have stocks at 15% with our RSP ETF. We have bonds at 10% with our GOVI ETF. Remember, we changed that one from GOVT a few weeks ago. This is a equal weight bond ETF, so it's more in line with our strategy for our portfolio. And we have our Bitcoin at 5% with our IBIT ETF. And several months ago, I forget how far back, we used to have BITO, but correlation was really bad with Bitcoin, so we switched to IBIT because the correlation is much better. So those are our target weights. I've talked about changing them around, but usually I'm a little reserved. I wait for things to happen, and sure enough, we've had a couple bad weeks, which has made me rethink of what I originally wanted to do. So now I'm thinking of something else I want to do, and we'll be showing that in the charts. Currently, our GLD ETF for the week is up 1.95% for a market gain of $2.46. Gold, even though being volatile itself, has still been holding pretty well. Definitely glad it's my largest position in this portfolio because it's been holding steady and it's had great growth. US dollar, horrible week, down 3.41% for market loss of $2.97. Sorry. Very bad week for the dollar. Very bad week. This is probably what I want to change. I wasn't expecting the dollar to be so volatile. I might have to reduce that. I've talked about that before, but damn, never like this. Commodities up 1.42% for a market gain of $1.16. Stocks down 1.94% for a market loss of $1.25. Bonds, keep in mind that my data is limited because I've only had this for a few weeks. So we're not going to get good monthly or quarterly or all-time data on GOVI because it used to be GOVT. So I'll have very short amount of information, but we'll show it on the chart to kind of really see what it's been doing. But for this week, though, it is down 1.32% for market loss of 59 cents. And then our Bitcoin up 3.17% for market gain of 60 cents, our IBIT. So that is our weekly percentages for week 33. We do our monthly percentages for week 33. So gold up 1.59% for a market gain of $1.99. US dollar still down, mostly from that 1 week, 3.58% for market loss at $3.02. So you see it's 3.41 for the weekly and 3.58. So it's really all in this last week where we're losing on the dollar. Commodities up 0.32% for a market gain of 26 cents. Stocks down 2.11% for a market loss of $1.32. GOVI, again, we won't have a full month's worth of data quite yet, but as close as we're going to get, we're up 1.64% for a market gain of 71 cents. And Bitcoin down 9.79% for a market loss of $2.01. Right? Bitcoin always being volatile. That's monthly percentages. Now we look at quarterly percentages. Gold up 10.60% for a market gain of $11.18. US dollar down 5.63% for a market loss of $4.17. This is not doing good, dollar. Not doing good. Commodities up 5.59% for a market gain of $3.44. Stocks down 4.21% for a market loss of $2.36. GOVI, again, it's going to be the same because look at it from monthly to quarterly. We don't have enough data on this, so we're just going to skip that one. We'll look at it on the charts so we'll get a better understanding of what its performance is. And Bitcoin down 15.81% for a market loss of $2.97. So this is our quarterly data for week 33, or quarterly percentages for week 33. Then we have our all-time percentages for week 33. So gold up 20.51% since the beginning, for a market gain of $14.64. US dollar down 5.75%, for a market loss of $2.77. Commodities up 13.08% for a market gain of $5.03. This has really been coming down. Stocks down 1.42% for a market loss of 50 cents. Again, bonds not having much data, so we're going to skip it. Bitcoin up 38.60% for a market gain of $3.90. Bitcoin's been doing bad, very bad recently. We have no new position changes, so these are all my position changes since I started the portfolio. So every time I increased or decreased a asset class, you'll see it reflected here on this page. There may be a new one coming up, we'll see. Like I said, I've been wanting to make some changes, but I'm just kind of watching as things happen. So we'll see how it goes. No new portfolio transactions this week. We have our Illuvium staking dashboard for week 33. Currently we have 9.44 ILV staked for a market value of $146.29. Now we have the current Illuvium price at $15.50. We have our vesting. So the very first one back in July of 2024. We have August, September, October, November, December. We have one each month. And then we had the most recent on page 2. We have January. This was supposed to be February, but I had an issue with my staking, so I did it at the beginning of March. But here it is, my most recent one, 2.30 ILV. So this is like the most ILV I've gotten. So I've never had 2 ILV in one purchase because the price is so low right now. So it's nice to dollar cost average, because then you can get some good buying opportunities. But this will take the longest to unlock in 360 days. And currently we have no new revenue distribution. So we're at $0. We have currently our 3 payments that we got 0.024 ILV, which has a current market value of 37 cents. And this was our purchase of the most recent ILV. So I purchased 2.30 ILV on March 1st. Then I staked it on March 3rd. And that was basically what you saw in that most recent transaction. This one right here, 2.30. And that is our weekly numbers. So now we go into our charts. So as always, starting with gold. Favorite assets doing the best. Did have a bit of a pullback here. So this is end of February, early March. And then it's pulled back up. But if you look at gold itself, we're still holding around this $2,900 level. Gold's just been a little shy of 3,000. Been a little shy of 3,000, going back. So we're just waiting for hit that magic number, and I feel like that's when gold's popularity will blossom. Like everyone's gonna talk about it when it hits $3,000. It's gonna be a whole thing. But as of right now, it's still our biggest asset in our portfolio, still in this uptrend. Like I said, still had a bit of a sell-off, but overall still holding. I don't see a reason why gold would go down, but of course I could always be wrong. There was this definitely post-election sell-off right here, but it has recovered since. But gold is still our best asset. I would almost like to increase it to 35% because everything else is just taking a shit right now. But like I said, I really want 30% to be my maximum. Theoretically, 35% to be my absolute pinnacle maximum. I don't want to go beyond a third of the portfolio in any asset class. I want to try to diversify as much as possible. Even if I have other things going down, I want to spread my my risk across multiple assets. That way, so it doesn't all go down together. If it does all go down together, it's spread up enough where it's not just one asset tanking. Commodities, USCI. So this big sell-off right here. This is from February 20th to March 3rd. Just been down. Commodities had a big drop. Still above this trend though. This long-term 2-year trend going back to July of 2022. So still above it. So still overall, very bullish, but a sharp drop here in commodities. I still don't think inflation is going to disappear around the corner quite yet. We may head into a disinflationary environment. I don't know. Because we've had an inflationary environment for so long, we might have disinflation. I don't know if we'll have deflation. That's a whole nother topic. But we might have some disinflation because we've had so much inflation. But I mean, still, if you look at this uptrend, like if you look at the CRB index, which doesn't have as good as a trend, but still pretty good. It's had quite a big drop right here as well. So it's also like had a big run up and it's just dropped right here. Still though, coming into this bullish trend, still in this bullish trend. Even if it comes down, it's still in this green trend. So like I said, we might have some disinflation, but I don't know if we're gonna have deflation. So we might have some of this steam from inflation coming off, but we're still in an inflationary environment. So I still don't see necessarily a reason to reduce my commodities position or my gold position. I still think inflation is winning, whether we want that or not. So I'm going to keep that. US dollar. This is just puking right now. Where's DXY? This is, look at that. Look at that. That is horrible. Look at this from March 4th to March 7th, 7th or 8th. This is just this week. This is a huge drop right here. It's only like a few bucks in the index itself, but this is a huge drop. You look at it, it's really been going sideways. This is what's concerning me. This is what I think about. I need to change, but I need something to put money into. The only thing I'm thinking is bonds right now because everything's taking a shit. But even bonds, I always get bonds wrong. I don't do that well on bonds, but I might maybe reduce this. Originally I was going to put it into commodities, which maybe I should, maybe I shouldn't, but commodities are pulling back. But maybe I should put it into bonds. I should put this at 15% and increase IBIT to 15%. Basically put back what I did, or I mean GOVI to 15%. Yeah, this has been a bad sell-off for the dollar. It's not been good. Remember, this part right here was the dividend declaration. So this is through the ETF, not the DXY. But still, even then, the DXY is coming down. So it's not been good for the dollar. Then we have stocks. We look at our S&P 500. Look at that. Look at that. It's already tapping this trend line. We go back. Let's see how far can we go back. Go back to November of 22. Other than this time here in November of 23, where it dropped and came back, this has been in a big uptrend. But look at this. Look at this. Tanking hard right here at the end. This looks like it's going to just break down. This looks like it's just breaking down. Like, I don't even know if it's going to continue down or not. I don't know if it's going to slice like a knife through butter on that thing. But look at volatility, though. Volatility. We're at 24, almost 25. If you look, put this blue line on the 20. We see kind of these. This goes back to 1990. If you look at kind of these under the blue line, like these kind of scoops. So from March 91 to September of 96, kind of in the scoop, low volatility environment, and then it gets crazy choppiness from 97 to 2003. This is like the dot-com bubble. It's like a lot of volatility during then. And then from 2003 to February 2008, kind of in that scoop, low volatility. And then look above it when it gets above 20, boom, 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 right? So this is like 2008 to 2012. This is the GFC, Great Financial Crisis, the housing market crash and all that. And then again, from 2012, you have lower volatility, you have a couple spikes, but overall the bulk of it stays below. And then going all the way from 2012 to 2020, then you have COVID pandemic, then boom, now we're above it a lot again. So we have this like low scoop. So here we are, kind of again, we had this scoop going from 23 to 24, which isn't that long, compared to these previous ones. But now we're kind of like getting back above it again. We're getting above the 20s. So I don't know, will it be like this one-off spike that happened in August of 24, where we had crazy volatility? So that's when you look at, let's see, where's August 24? April, May, June, July, August. So this is where we had this big sell-off right here, where it dropped down and tapped the line, but then it came back up. All right, I don't know if that's going to be the same thing again. It's going to be like it's going to come to the peak, drop down, then come back up, or it's going to be like this, where we go back to 23, and it goes down and then comes back up. We'll have to see. Yeah, but this volatility, because in 21 to 22, it was pretty volatile. Then it dropped down. But getting back up above the 20 line now, you know, it's no longer in this like scoop area where it was like low volatility. Now it's coming out of the volatility, and it's coming pretty steady. Like, look at this line steadily coming up. It's just steadily coming up. We got a 6 month. Look at that. Right? It's just steadily coming up. So there's a lot of volatility in stocks right now, and it's showing too in my equal weight. It's already at the bottom of the line too. Equal weight is coming down. So that's why I said like a lot of stuff's coming down right now. So it's a little crazy. We got our GOVI, our bonds. So bonds since January 10th have been coming up. Kind of hit this bottom. I don't know if it's going to keep coming up or not. I might have to increase just to pull some out of my dollar, because man, it's tanking. My dollar's tanking. But bonds have been taking for so long. If you look at it on a 5-year, you know, going back to the start of the pandemic, just been down, right? I'm hoping we're kind of maybe in that scoop where we kind of hit the bottom and now we're starting to come back up. But it's just a slow rise back up. But this may be the better option, even though it's still overall not doing that great. But maybe bonds are the way to diversify out of the dollar to help spread my risk better. And then Bitcoin, good old Bitcoin, definitely came off hard off of this sell-off right here. Basically hit that 100,000, and then kept losing steam and losing momentum. And I've showed this chart every week just because I think it's not necessarily correct, but Bitcoin has not yet broken it. So we had our peak back in 2017. We had a double peak in 21, at the beginning of 21, at the end of 21. Then we kind of had this like double top in 24, 25, and then it just crashed. Like this little area right here just crashed down. So far, it still hasn't broken. It still hasn't caught up. So I don't know if Bitcoin's going to break 100,000. At least not yet. Maybe in the future. But I mean, you look at stocks. You know, they're breaking down. You know, freaking the dollar's breaking down. It's like everything's kind of breaking down, right? So I wonder if I'm looking at the 10-year, thinking about bonds, if it if it could break this line, come down, then you know our bond position, our GOVI, could go up. You know, so if rates come down, maybe bonds could come up. Then it'd be a good time to rotate into bonds. But as of right now, I don't know. I'm still uncertain, and everything's still very volatile. So we'll have to wait and see. But at the very least, like I said, these past couple weeks have been pretty volatile. If you're making money these couple weeks, good for you. Because like a lot of things are going down, and it's a difficult time. Mostly gold has been doing the best. Gold and commodities overall have been doing the best, but even commodities are taking a hit right now. Gold took a hit, but still, man, it's still around that 2,900. So it's still doing good. So I don't know if I want to put much more into commodities because I feel like it's too much, but we'll have to see. I might put it into bonds now just because everything's taking a shit. But I'll think about it next week. And as always, I'll give you a weekly update so you can see the performance of the portfolio. So as always, thank you for watching. If you have any questions, comments, or criticisms, let me know. And have a good day.